7 Simple Steps to Building a $1 Million Investment Portfolio in Your 20s. Welcome to the ultimate guide on building a $1 million investment portfolio in your 20s. It's never too early to start planning for your financial future, and with discipline, consistency, and time management, becoming a millionaire investor is within reach. In this video, we'll break down 7 simple steps that will help you build a solid foundation for your investment portfolio and put you on the path to financial freedom. So let's dive in. Building an investment portfolio is a crucial step towards achieving financial independence and building wealth. An investment portfolio is simply a collection of investments that are owned by an individual or organization. These investments can include stocks, bonds, mutual funds, real estate, and other assets. The goal of building an investment portfolio is to create wealth over time through diversification and growth potential. To build a successful investment portfolio, it's important to start with a solid plan. This means setting clear goals for your investments and determining the level of risk that you're comfortable with taking on. It also involves assessing your current financial situation and determining how much money you can afford to invest each month. Once you have a plan in place, the next step is to choose the right mix of assets for your portfolio. This involves researching different types of investments and choosing those that align with your goals and risk tolerance. Maintaining discipline and consistency in your investing strategy is key to long-term success. This means regularly monitoring your portfolio performance, rebalancing when necessary, and staying committed to your overall financial plan. Your 20s are the perfect time to start building your investment portfolio. It's a decade where you have fewer responsibilities and more freedom, allowing you to take risks and invest in high-growth opportunities. However, it can be challenging to balance investing with other commitments like work or school. To succeed in building a $1 million investment portfolio, discipline is key. This means setting clear financial goals and sticking to them. Avoid impulse purchases that eat into your savings and focus on long-term investments that will yield returns over time. Consistency is also important when it comes to investing in your 20s. Even if you can only afford to put away a small amount each month, make sure you do so consistently. The power of compound interest means that even small contributions can add up significantly over time. Investing wisely is critical for growing your wealth in your 20s. Managing your time effectively is crucial when balancing investing with other commitments during this busy period of life. Becoming a millionaire is not an overnight success story. It requires discipline, consistency, and hard work over time. However, with the right mindset and approach, anyone can achieve this goal in their 20s. The first step to becoming a millionaire is to set your financial goals early on. You need to have a clear idea of what you want to achieve and how much money you need to get there. This will help guide your investment strategy and keep you focused on your long-term objectives. One way to build wealth quickly is by investing in stocks or mutual funds that have high growth potential. While these investments come with risks, they also offer the opportunity for significant returns if done correctly. Another important factor in building wealth is practicing good spending habits. Avoid unnecessary expenses that eat into your savings potential, such as eating out regularly or buying expensive clothes and gadgets that lose value quickly. It's essential to always be learning about personal finance strategies while making smart financial decisions along the way. With discipline, consistency, patience, anyone can become a millionaire regardless of age. Discipline is one of the most important traits when building a $1 million investment portfolio in your 20s. It involves staying focused on your long-term goals and making sacrifices to ensure progress towards them. One way to cultivate discipline is by setting clear financial targets and sticking to them. This could involve creating a budget, tracking expenses, and investing regularly in low-cost index funds or exchange-traded funds, ETFs. Another key aspect of discipline is avoiding impulsive decisions that can harm your portfolio's growth potential. This means resisting the urge to chase after hot stocks, timing the market, or panicking during periods of volatility. To stay disciplined over time, it's also essential to maintain realistic expectations about how quickly your wealth will grow. Building a $1 million investment portfolio takes time and patience, so it's important not to get discouraged if you don't see immediate results. By staying true to your financial objectives and remaining committed even through challenging times, you can increase your chances of achieving long-term success in building a sizable investment portfolio. Consistency means staying committed to your investment plan and not letting short-term market fluctuations or emotions deter you from achieving your long-term goals. This might mean setting up automatic contributions into your investment account each month or quarter. By doing this, you're consistently adding money to your portfolio without having to actively think about it. Another way to stay consistent is by sticking with a diversified portfolio that aligns with your risk tolerance and financial goals. This doesn't have to be a daily task but should be done periodically throughout the year to ensure you're on track towards reaching your financial goals. Investing is one of the most important steps towards building a $1 million investment portfolio in your 20s. It allows you to grow your money over time, and if done correctly, can provide substantial returns on your initial investment. It's important to do your due diligence when choosing investments and diversify your portfolio to mitigate risk. Trying to time the market or make quick gains can lead to poor decision-making and ultimately result in losses. Instead, focus on making consistent contributions over time and taking advantage of compound interest. Another key aspect of successful investing is staying informed about market trends and industry developments that could impact your investments. Don't be afraid to seek help from professionals such as financial advisors or investment managers who can offer guidance on developing an investment strategy tailored specifically for you. You need to set specific goals for yourself and prioritize accordingly so that you can balance work, social life, personal hobbies, interests alongside learning about investing.